there's only one story right now, and that's inflation affecting all of us. And it's getting worse and worse and worse. Policymakers in the government don't seem to know what to do about it. And whatever they're doing is making it worse. I drove in today, Jim, and I saw $5.15 for a gallon of gasoline.
Sickening.
It's going to be cheap by the end of the summer. Trust me, it's going to be cheap. If you had a tank that you could fill up with gasoline at $5 a gallon, you should do it right now. I mean, not your car tank. I'm talking about like, 1,000-gallon tank, because it's going to be $6. It's going to be $7. It's $8 in parts of California. This is starting to get ridiculous. And the worst part about it is it's self-inflicted. I mean, this administration has done everything they can to limit the supply of energy here in the United States. There's a coordinated effort, it seems, and we're going to talk about this as the show progresses, that they're trying to destroy us in every way. Something's going on here, and we'll try to figure it out as the show goes on here. But it's one thing after the other. It's just like a perfect storm. Like you couldn't plan this out. And when I was driving in this morning, it came to my mind. I was saying, you know what? What's going on now with the Biden administration? That shouldn't be there in the first place, because most people that have a head on their shoulders realize that this election was rigged. I don't want to go through the details of how it was, but if you don't believe it was rigged, then you're an idiot. If you believe that Biden in his basement, that's the way he campaigned, he had 3 people at any speech he gave, and Trump is filling up stadiums, and Trump lost, well, that's a whole other debate we could have some other time. But the fact is, I was thinking about, Jim, you seen the movie It's a Wonderful Life? Everybody's seen it.
Absolutely.
All right. So I was thinking that, when George Bailey goes back in time, right? Mm-hmm. And the whole world is totally upside down, right? Everything's bad. People are killing each other. People are fighting each other. Everybody's poor. I was thinking about that's what's going on right now. We're living in an alternative reality. That with this, if Trump was president, think about how many more people would be alive in the world. The Ukraine war wouldn't have happened. We wouldn't have had the withdrawal from Afghanistan. Who knows? Nobody knows what the future would have held if Trump is still president. But I have that feeling coming in today that it's a wonderful life. I mean, we're living an alternative reality that's not real. You hope to wake up one morning and say, oh, boy, thank God that didn't happen. Thank God Biden didn't win. But he did. Or at least he's president at this time.
And it's crazy to think we still got 3 years.
Well, 2 years, 2.5 years. I don't even know what the next 2.5 years are going to look like.
Who knows?
I like to predict the future, but I don't want to go there. I mean, there's too many variables from an economic standpoint, from a geopolitical standpoint, from a societal standpoint, and a cultural standpoint. It's a mess. And, many of us can't even believe we're here. Not to mention living through the COVID thing the last couple of years. And it's just craziness that we're living in now. And maybe it truly is end times. I don't know. But really it is, it's not good. And it's affecting the average family in just terrible ways. It really is. And I feel so bad for retired people on a fixed income, families that, before this crisis, before inflation hit, 2/3 of Americans were living paycheck to paycheck, right? That means that they're barely affording living. And now the prices of everything skyrocketing. Well, it certainly didn't get better, right? Listen to this. This is going to get a lot of people upset. Here's a headline. 36% of Americans making $250,000 are living paycheck to paycheck. Could you imagine? 1/3 of people. Most people would give their right arm to be able to make $250,000, $250,000 a year. But over 1/3 of Americans say they're living paycheck to paycheck, according to Bloomberg. Now, why would that be? I mean, if you make $250,000 or more, you're in the top 5% of earners in the country. I guess they have terrible financial literacy issues. Remember last week we were talking about financial responsibility? financial literacy the week before. These people, what they've done is, most Americans, as they make more money, they increase their standard of living. Bigger homes, newer cars, more travel, vacations, and everything else, right? So this is pretty shocking. People who are making 4 times the median U.S. salary devote almost all their income to household expenses. And a third of them say they have hardly anything left at the end of the month. Well, that's on them. That's because they're living stupidly. Now, just because they're living paycheck to paycheck doesn't mean they're under hardship. They're not under hardship, but they're just not saving anything. They're spending it all on their standard of living. They're living for today and forgetting about tomorrow. And that's what we talked about last week, financial responsibility. Housing expenses are a big part of it. I mean, in certain areas where the wealthier people live, they take Orange County, California, a decent home costs $1.7 million. So a mortgage on that house, assuming you put 20% down, is going to cost you $100,000 a year. That's 40% of the $250,000, not counting taxes and everything else. You make $250,000, take home $250,000, right? Right? You're going to be paying, 25 to 30% in federal income taxes, and then state income taxes. If you live in most wealthy people live in high tax states. California, New York, Illinois, stuff like that. And we'll talk in a second about, a quarter of Americans are now delaying retirement due to inflation. So this inflation thing that's going on is real, and it's really hurting people. And in my book, The Financial Physician, How to Cure Your Money Problems and Boost Your Financial Health, I have a subject in there, I have a chapter in there, chapter 14, about not understanding the impact of inflation on your life. Now, when I wrote this, there was hardly any inflation. This was 12 years ago I wrote this book, right? But here it is, and we're in an inflationary times right now. And the first sentence of the chapter is, inflation is a slow-moving cancer in the financial body that erodes our purchasing power. It's not slow-moving right now. It's a stampede of inflation. And inflation happens when the money supply expands. And what happened over the last 10 years since the great financial crisis of 2008? Well, it's nothing compared to the greater financial crisis that's on the horizon right now. How much money was created? Trillions and trillions and trillions of dollars. Just since the COVID thing, we've seen the money supply increase substantially. I have in front of me here a chart of M1 money supply. You have to see this to believe it. Because even me explaining it to you does not give you the shock of looking at the actual chart. And it goes from 1960 to present. Let's talk about 1970. The M1 money supply, by the way, M1 money supply is cash in circulation, it's money in savings and checking accounts. Liquid money that's out there and available. In 1970, it was $400 billion was the M1 money supply. Now let's go 40 years later. Now in the beginning of 2010, it was only $850 billion. A little more than twice. But you're talking 30 years later, so that's not too bad. But by the end of 2010, it was $1.8 trillion. So it went up $1 trillion in 1 year in 2010. Let's move ahead to the beginning of 2020, the beginning of the COVID craziness. We were at $4 trillion in M1 money supply. By the end of 2020, we were at $17 trillion. Wow. We went from $4 trillion at the beginning of the year to $17 trillion in money supply at the end of 2020. That's called inflation, my friends. That's the definition of inflation. The increase in the money supply. Prices follow that. With all that money sloshing around the system, it bids up prices in real estate and stocks. Inflation is not hard to understand. It's basic economics. Inflation happens because the money supply increases. And why does the money supply increase? Because government starts spending more than they take in. So the central bank, in our case the Federal Reserve, has to create money to fund the government. Unless investors worldwide want to buy our debt, which they don't, and I don't blame them, well, then the central bank comes in and does what's called quantitative easing. Quantitative easing means that the Federal Reserve creates money on a keyboard and a mouse. You know, people think, oh, they print money. No, they don't print money. I mean, the mint prints money, you know, for circulation, but the increase in the money supply happens because the Federal Reserve, someone goes to a computer and just says, here's $1 trillion, and they just zip it out to the banking system. Where did that $1 trillion came from? From thin air. And that money goes into the system. So all this fake money starts flowing through the system, pushing up the price of everything. And that's inflation. Inflation is not the rise of prices. Inflation is the expansion of the money supply, which results in higher prices. And that's what we're doing now. So I said at the end of 2020, the money supply went from 4.04 trillion in the beginning of 2020 to 17 trillion. Quadruple. That's insanity. How did the Federal Reserve, how did the policymakers, the government, not realize that you can't quadruple the money supply without having a massive inflation problem? But they did. Well, where is it today? Today, in not even mid-2022, we're at 22 trillion. So in 2 years, we went from 17 to 22 trillion in money supply, another 5 trillion. And you're wondering why the price of everything is going up? There it is. It's not rocket science. And there's no will to stop it. Yeah, the Federal Reserve is coming out and they're raising interest rates. Well, big deal, 1%. We're at 1% right now. Inflation is raging at what? Real inflation, 17%, 18%. The things we use every day, like gasoline and food and meat and all that stuff, is up more than the government says, 8%. And as night follows day, I mean, it's that simple. You look in history. Anytime you expand the money supply, especially when you do it in great numbers, you have an inflation problem. And this has been created. And I have no confidence in the Federal Reserve whatsoever to quell inflation. Because think about it, the economy now and the housing market, everything is going in the tank with 1% interest rates. I mean, we're talking about, in 1980, when we had similar inflation, interest rates were 18%. We're at 1%, and the markets are freaking out. The bond market, the housing market. And do you think the Federal Reserve could really raise interest rates enough to make a difference on inflation when markets are going crazy? We're entering a recession right now. Nobody's saying, well, some people are saying it. But we are, people talking about, well, we may go into a recession. What do you mean we may go into? We're already there. By the time they tell you you're in a recession, it's already 6 to 8 months into it. And now you're having some of the biggest investment banks coming out and saying that we have a big economic problem ahead of us due to inflation. Now, J.P. Morgan, the CEO of J.P. Morgan, Jamie Dimon, another man who should be probably in prison, his firm has paid billions of dollars in fines for fixing markets and all kinds of stuff. But he's still there. But anyway, this guy, Jamie Dimon, smart guy, very rich guy. He came out and spoke to investors this week, and he really upset the markets because he was talking about a hurricane coming in the economy.
It's a hurricane. Right now it's kind of sunny. Things are doing fine. You know, everyone thinks the Fed can handle this. That hurricane is right out there down the road coming our way. We just don't know if it's a minor one or Superstorm Sandy or Sandy or Andrew or something like that. And it's you better brace yourself.
So when you have a guy like Jamie Dimon, now he's in the know. J.P. Morgan, part of the Fed and the whole system. When he comes out and tells you that a hurricane is coming, he knows. And you better listen to what he's saying. But he's not the only one. Goldman Sachs president and chief operating officer John Waldron said on Thursday that the current economic turmoil is one of the most challenging ones he has ever faced in his career. Quote, "This is among, if not, the most complex, dynamic environment I've ever seen in my career. We've obviously been through lots of cycles, but the confluence of the number of shocks to the system to me is unprecedented," he told a banking conference. And again, that follows one day after Jamie Dimon from J.P. Morgan came out and said a hurricane is coming. So when you have top guys at Goldman Sachs, J.P. Morgan, telling you that an economic storm is coming, you better listen. And you better prepare for it. So we haven't seen inflation like this in 40 years. My feeling now is that this inflation that we're seeing is going to be historic. And it's not going away anytime soon. And the problem that we have now is inflationary expectations, which is what people believe is going to happen in the future, is skyrocketing. So when you have inflationary expectations going up, what does that mean? Look, if you think something is going to be more expensive in the months ahead, I always use the analogy, I'm a coffee lover. You like coffee? If you think it's going to be 30% more expensive in 3 months, what are you going to do today? You're going to go out and buy as much coffee as you can, right? Why do I want to pay more in the future? So by doing so, and you're not the only person doing it, you're not the only smart person in the world, you're going to have demand go up, supply go down, and prices skyrocket. So it's almost a self-fulfilling prophecy, inflationary expectations. And that's a big problem with inflation. It kind of feeds on itself because people are worried about the future. And if your dollar is going to go down in purchasing power, you want to get out of dollars and buy as much things as you can. Things that will keep pace with inflation. I'm an investment guy. People ask me all the time, Lou, what's the best investment you can make today? Food. It's that simple. Food is going up in double digits. It's going to continue to go up. You have no idea what's coming down the pike here. I do. Farmers are telling us, they're warning us that food prices are going to skyrocket. We're going to have shortages coming into the fall, maybe later summer. You better be prepared for that. Best investment you can make is food. And if you're not out there buying non-perishable food items right now, what are you doing with your money? Are you leaving it in the bank earning nothing while inflation's running rampant? And that's what happens when inflation really starts peaking. People start to panic. And they want to get out of the currency. They want to buy things while they still have some value. You know, their money can buy things. And we're at risk. I don't want to scare anybody, but we're at risk of a hyperinflationary event here. What's hyperinflation? I mean, the real definition, which doesn't have to happen to be a crisis, is prices going up 50% a month. Now, I don't see that happening. God forbid. But hyperinflation is certainly at risk right now. And as we see the economy starting to decline, the first quarter we had negative GDP. We'll see what the second quarter shows. I wouldn't be surprised if we had a negative quarter again, which is the definition of a recession, which is 2 negative quarters in a row. The Fed's going to probably back down and say, we can't keep raising interest rates. The economy's crashing. The markets are crashing. The real estate market's crashing. And they're gonna reverse themselves. The Fed has a reputation for always rescuing the stock market. And as the market declines, they're going to come to their rescue, or at least halt what they're doing. Let's look at financial markets for the week. The Dow was down a little under 1% for the week. Year to date, the Dow is down 9.46%. The S&P 500 was down 1% for the week, down 14%. The Nasdaq was down 1% for the week, down 23% for the year. Oil closed on Friday at $120 a barrel. Keep an eye on oil, my friends. That is the key to inflation across the board. Oil goes into everything. Diesel prices, diesel fuel goes into trucks, goes into farm equipment. Not only are we seeing skyrocketing record prices in diesel, we're seeing shortages. First thing I look at in the morning, when I look at two things when I get up in the morning. I look at the price of oil, what's it doing today, and I look at the yield, the interest rate on the 10-year Treasury bond. That tells me everything for the day. Mortgage rates in the United States, 30-year fixed rate mortgage is up to 5.40%, which is the highest it's been for as long as I can remember. It wasn't long ago we were looking at under 3% mortgage rates, 5.4%. Pricing a lot of people out of homes. If you're thinking about selling your house, you better put it on the market now. Because we're going to see declining housing prices. We're starting to see housing prices peak right now. And housing prices are going to go down. It's just that simple. I mean, if interest rates go up, people could afford less payments per month. They could afford less house. Demand goes down. Supply goes up. And now we're starting to see listings go up. That was a big problem, inventory. A lot of real estate agents were saying, we can't get inventory. Nobody's selling. And when we get a piece of property to list, it's gone in a day. Well, now we're starting to see people starting to panic a little bit and say, I better list my house while interest rates are only 5.4% on a mortgage. Funny money, Bitcoin, and other digital currencies continue to decline. Last I looked, Bitcoin was 29,000 and change. Wasn't long ago, it was 65,000. So we've told you for a long time, I think it's worth zero, but what do I know? I don't understand it. I'm an old fogey. Look at natural gas prices. Right? And as I said, energy goes into everything. It goes into your electric bill. It goes into your heating bill in your house. Natural gas was, I don't know what the unit is, but it was 4 in February. It's 8.53 today. So from February to June, it's more than doubled. That's inflation. I mentioned before that food prices are set to hit Americans this fall. The Epoch Times has a headline, Looming Price Hikes on Food Set to Hit Americans this fall. Higher inflation could force Fed action, leading to a deeper recession. Now, I don't see how the Fed raising interest rates is going to stop food prices. Food prices are going up for a number of factors. A, weather. We're having unusual weather issues around the world right now. Drought in the United States, problems in Brazil. Just around the world, you're seeing all kinds of weather-related issues. Again, a perfect storm, if you will. How is raising interest rates going to change that? How's the raising interest rates going to change the price of fertilizer? A quote from a Texas farmer. People don't realize what's fixing to hit them. They think it's tough right now. You give it until October. Food prices are going to double. Double! The 8.8% increase in food prices that Americans have already seen does not take into account the dramatic cost increases that farmers are now experiencing. This is because farmers pay their cost up front and only recoup them at the point of sale months later. Usually, what we see on the farm, the consumer doesn't see for another 18 months, said John Chester, a Tennessee farmer of corn, wheat, and soybeans. But with the severity of these cost increases, consumers could feel the effects much sooner, particularly if weather becomes a factor. A North Carolina farmer who raises hogs and grows corn, soybeans, and sweet potatoes said that the spike in fuel cost has put her farm into the red this year. Nothing that consumers are paying is going to bridge the gap for farmers right now, she said. The prices now have not hit the grocery stores yet, but she expects they will start to by the end of the summer. And much of the cost of food hinges on the price of oil. Remember I told you, energy prices flow into everything. Shipping, production, manufacturing. She goes on to say, they have no electric trucks delivering that food, and there are no electric tractors. It takes diesel to run all this. She said that fuel and fertilizer together make up 55% of his total costs. The price of diesel fuel has more than doubled. The cost of fertilizer has tripled. And by the way, fertilizer is a byproduct of energy as well, of oil. Daniel Turner, Executive Director of Power of the Future, an energy advocacy group, said that when you look at the machinery that uses diesel, it's farm equipment, it's railroads, it's truckers. It moves all our goods, it grows our food, from cargo ships arriving overseas to trucks or trains getting those goods across the country. All those things now have added costs that will be sent to the consumer. And the problem is, if you have to pay a lot more for food and gasoline in your car, that takes away from other expenditures that you're going to do. You're going to cut back, and that's what causes recessions, is demand. People are not going to buy new clothes. They're not going to buy discretionary things. They're not going to go on vacations. That hurts all these industries that depend on that demand. And all the reports coming out now are indicating that Americans are already unable to keep up with inflation. Household savings fell to the lowest rate in 14 years. As people are struggling to maintain their standard of living, they're using up their savings. Credit card debt hit record highs. We mentioned a couple of weeks ago that in April, credit card debt went up $52 billion. A record. Nobody even seen it coming. Well, that's understandable. If everything's more expensive and people can't afford it, then they're going to borrow money to pay their bills. But Biden thinks that, no, Americans are doing just great. He says Americans have less debt and more savings now. I mean, somebody should wake him up and say, you know, Joe, we're in 2022. You're president.
Since I took office, families are carrying less debt. Their average savings are up. A recent survey from the Federal Reserve found that more Americans feel financially comfortable than any time since the survey began in 2013.
What? Who is this guy? Everybody's just the opposite. Debt is skyrocketing. Savings are plummeting. People feel more financially insecure than ever. And he comes out and lies to you and says, oh, everything's great. People feel better now than they ever felt about their financial situation. It's incredible. And the problem is a lot of this thing is self-inflicted. Energy prices, energy shortage are the result of the policy of the Biden administration. which is trying to force Americans to switch from fossil fuels to electric, wind, and green stuff. And he said it. He said, this is an incredible transition, right? You heard him a couple of weeks ago. It's an incredible transition. What does that mean? It means it's all good as far as he's concerned. This is what he said a couple of weeks ago.
When it comes to the gas prices, we're going through an incredible transition that is taking place that, God willing, when it's over, will be stronger and the world will be stronger and less reliant on fossil fuels when this is over.
Okay, so that's what it's all about. There it is right there. He just said it. It's all about the Green New Deal. And that's why we have to suck it up and enjoy the pain. That's basically what he's saying. And his energy secretary is crazy. You know, everybody who's in the cabinet of this government are left-wing radical lunatics. And they're the ones who are running our country right now. Remember what I was talking about before. Wonderful Life, the alternative reality that we're living through because of a rigged election a couple of years ago. Economically, like I said, hundreds of thousands of people have lost their lives over that. Whether you're Russian soldiers, whether you lose 30,000 soldiers so far in Russia, not to mention how many Ukrainians, civilians. It's amazing how they say elections have consequences. In this case, a rigged election had really bad consequences for a lot of people, and it's ongoing. And you know, it's I don't enjoy coming in here on a Sunday morning early and talking about such negative stuff. You notice how Biden now says everything's God. God willing, God's sakes. We got to take guns away for God's sakes. For a guy who talks about God all the time, it's pretty pro-abortion, isn't it? Energy Secretary Jennifer Granholm. Did you see this babe? I mean, she's a whack job. But they all are, as I said. They're all lunatics. She said that rising oil prices were an exclamation point for the need to transition to wind and solar and build homegrown clean energy. If you drive an electric car, this would not be affecting you. With natural gas prices now hitting 14-year high, Biden's Department of Energy recently posted, quote, a few tips on how you can prepare your home and office to safely navigate a blackout. It's just crazy. This is done on purpose, people. They did everything that's the opposite of what you should do to get energy prices down, and doing everything that you should do to have them skyrocket. You know, you don't hear anything about what they'll do to increase production in America. And they're comfortable with the current state of affairs. They really aren't, because of their green philosophy. And we're just necessary casualties. It's all purposeful. I'm telling you. It's all purposeful. Let's take a break. 732-237-9626 is the call-in number. My name is Lou Scatigna. You're listening to The Financial Physician. Don't go away.